Good evening all and welcome to the Nightly Market Intelligence Report. This is Jeff Killian, Chief Market Strategist for the Inside Technician, reporting in December 25th, 2012. The time is 7:40 p.m. Eastern. Although no action today because of a U.S. holiday, yesterday's half day in the U.S. markets confirms on a larger scale what we had suspected as being in the very beginning of a brand new major market sell-off. The volume that came in here, as evidenced in the subgraph below, on the 21st was without a doubt one of the largest volume sell-offs in U.S. market history to date. Similar but not the same as the same sell-off that came in on 9/21/2012 when we called the market sell-off at this point here, which brought prices all the way back down to the market bottom, which we again called on the report at this level. Let's take a look at some of the indicators and discuss why we are in the situation that we're in and the reality of the future directional price movement after we take a look at a few levels here. The level that we stand at right now based on 1224 is 13,190. That needs to be closed through. The next support level to the downside is 13,072, and again the next level here in white is 13,026. The next level that will be laid out will be right here by the open of 12.5. That price will be 12,948.96. Let's call it 12,950. So those are the levels. The indicators are saying that the MACD has almost crossed our major market trend confirmation, long or short, in this case to be officially short, again, the U.S. markets. If we take a look here at the check and money flow 21 period, the trend line was violated here, downward momentum since that point way back here on the 18th. One of our major smart money indicators to find, track, and trade in the right direction of these insiders, these largest institutions within the market. The money flow 14 period had a substantial negative divergence before its momentum completely fell off here. And again, confirming the prices to the move on the downside. The EMA is officially crossed on the 24th in the real-time session. Now, this is a major event on our end here because usually the EMAs or the MACD will be the last indicators to fire to give us the 100% that we are officially short. We're calling it a little bit early here because of the price chart pattern and the substantial sell-off here on 12/21. Now, if we take a look at the stochastics momentum, our chief market scout, this crossed way back here from above to below after hitting the oversold zone right here on the 21st. Now, what else is evident? A major trendline violation, again, on the 21st. So we have a lot of things happening all at the same time, giving us the actionable intelligence by following this smart money trading methodology to actually call this market short in the moment. Now, we posted a video to YouTube just the other day from the last Nightly Market Intelligence Report saying that the U.S. market sell-off is imminent. It's either that or it's one of the most significant shakeouts to the downside before prices trade again to the upside. But because of now the new event of prices trading down again on another market down close on the 24th, we now believe that for sure this is a major market sell-off in play. So let's get out of this and take a look at some of the sectors and reference the ETFs that are traded against them. Okay. What we're viewing here is 10 sectors within our highly organized database within the S&P 1500. The volume spike is very evident here. Again, across the board, we had volume spikes on the 21st. Okay, we were in here looking to get long, and out again right here again for the 24th, reported again tonight on the 25th for a break-even trade on XLK, the ETF traded against information technology. Here, if we take a look at the 40 financials, has the strongest positive relative strength as compared to the most recent sell-off in progress here. Again, right about 8.6 up. And we're probably going to be out of this tomorrow unless something significant happens. Right now, it has the strongest, again, positive relative strength price-wise as compared to the rest of the sectors that we're tracking in the U.S. markets. Let's take a look here. 1225, we were short on 1224. Right here, breaking through this level, some of the prices established here to be short because of what we believe, again, is a smart money sell-off that came in on the 21st. Again, short the ETF symbol XLV as compared to the 35 healthcare sector. Here, again, 24th coming in, short as of 1224, catching this move. Again, remember, short as of here, short again, short, short, short. We were in this at exactly the right time in consumer staples. The ETF traded against it, XLP. Wait back here, we had talked about this and had discussed how that if, in fact, consumer staples, excuse me, was going to be the sector that would trade down first in a major market sell-off, that we wanted to be there. And so we were short, as witnessed by the report on 12/19. And again, short again. Let's take a look at the next sector, the 25 consumer discretionary. The ETF symbol traded against it, XLY. We have a repeat of 1223 right here. It depends on what happens on tomorrow's action, the move will take, but it looks like it's going to be short because it's a setup for the short side pretty much across the board. Again, on 1225, again, a repeat of 1223. The last report that was broadcasted out could be closing this position out and lock in the substantial profit that we have made on this ETF symbol XLB traded against 15 materials, where we were in here, and we'll probably be out again tomorrow. Okay, let's take a look at 10 energy sector. The ETF symbol traded against it, XLE. No call, no action, not enough volume. Okay, here let's take a look at 55 utilities. The ETF symbol XLU traded against it. We are out on 1224. Reporting in again tonight, 1225 for yesterday's, for the 24th action right here. Out, in here, out here. So again, we were short on 11.5. We covered that short, went long here, and are out here with a substantial profit. All the numbers will be reported on tomorrow night's report. Okay, let's take a look at the next sector here on 20 industrials. The ETF symbol XLI traded against it. We're out on the 24th. Why? Because of the smart money that came in that was after we had called the trade to be long, changing everything. A total game changer across the board this volume has produced for us here. And it's good because when we're on the right side of these large institution hedge funds, we can make a multitude of short plays on the futures or ETFs, as we did on long and the last short call, to way outperform the market averages. So again, on 1224, we're out of this particular symbol with a break-even trade. Cutting the losses, short or break-even trades, is the preferred method here. That's it on the ETFs. Let's get back and get right out of them 100%. Here we are, closing out and getting right into the continuous contracts. Let's take a look. Moving just a little bit faster than equities as we stand. The long spike down is what changed everything for us, with the volume on the equity side behind it that was not as evident in the S&P 500 mini futures. This is why we look at the Dow, and in our courses we also look at the S&P 500 equities. There was substantial volume in that index as well. And here on futures, less evident, but evident here on the date of 12/18 before the equities sold off again on the 21st. Once again, futures leading the U.S. markets again to the downside. The substantial drop on the low here on 12/21, again with the volume that came in on the equities, was the deal that sealed it for us on our end. Now the next level to the downside is right here at 1415.75. Very little resistance to the downside from that level all the way down to here as outlined by 12/5/2012 at 1402.75. As prices trade down, we will go ahead and broadcast out the continuing levels to the downside to use them as price profit targets and superior support levels as prices continue to trade to the downside. The indicators, as you can see, we're again ahead of the equity side here, again trading down with more momentum. The gap down on the 24th on the futures as compared to the Dow, and it never was closed. It's significant in representing additional weakness. MACD is ready to cross here, and here we have our Fibonacci chart laid out. It's broadcasted from the date here, and again here, looking for the upside move. Price is found right about 76.4 as a blow off, and have turned back around on our pretty much right here, right now, at the 61.8% retracement level at about 1975, 1420. Here's the low broadcasted all the way down where prices could hit at the 38.2% level for the future. Here we are in the Chaikin money flow indicator, looking at the continuous contracts on the S&P E-mini. The cross of the trend line, significant. Again, what date? The 18th, ahead of equities. Our primary purpose in reporting the nightly market intelligence report is so that you can stay with us and see how to expertly time these market turning points so that you can be flat, short, in a situation where you have the optimum entry point to be able to do this, to make the correct and precision, again, entry point to catch the lion's share of the money. Anybody who's been trading a long time, all of you, there are seasoned professionals out there, we all know very well that the best trades are the ones that are entered at the precise time, so we start making money right away. And this is what we do here. So let's get out of the futures and take a look at real time. On the E-minis, right now, the mark to the market last price was 1419.75. We have a current level that's established on the 15-minute charts right here, as outlined by these prices in and around this level, as broadcasted out at 1417. Now, since the money flow dump came in here on a 14 period, it appears that even though we have some relative strength moving to the upside, that more downward movement is evident. Now, historically speaking, Monday is one of the greatest turnaround days in the U.S. markets, but it's not Monday. Tomorrow is the day after Christmas, but for all intents and purposes, it is a Monday. And this will be, more than likely, a large day within the U.S. markets trading to the downside. Now, this is the setup for the time. Let's take a look at the Chaikin money flow. Very slow moving upward momentum here, and then a dump. So indicating more weakness than strength within the last 20 bars of the 15-minute chart, with a lot of volatility here after the short move up. Here, MACD has already crossed to the downside, and the stochastics has completely bottomed out, even crossed from above to below the -50 level. Here in the 1-minute chart, again, the last price is broadcasted out. We're 1419.75, and this is where we stand right now. Now, let's take a look here real quick at CME Group's publication. Here we are on the CME Globex Christmas holiday schedule. 24th, we had a short day, and again, Tuesday closed for Christmas. Wednesday, which is our Monday for trading, we have an open session on the overnight beginning at 0500 hours Central Time for the trade date for Wednesday the 26th. So we're not really going to have any inclination as to the magnitude of the down move until the overnight session opens, and really right before we get to equities at about 9:29 p.m. Eastern Standard Time. The session close for the trade date for the 26th will be 16:15 Central Standard Time. So that's what's happening, and again, we are calling it. We are officially calling it ahead of time, in process, but way ahead of time, as we did on the last report that was broadcasted out. Major market sell-off in play at this time. Let's be prepared. Let's keep our stops close. Just because it is a holiday, it doesn't mean that we can afford to take time off if our business is the business of making real money. We'll see you tomorrow on the next Nightly Market Intelligence Report. Good night.